Now in studio, we want to discuss matters investments. And the world has moved. There is AI. You use ChatGPT if you do. For those who are in school and those who are studying, or even in offices, people use that. But how is AI being used in investing? And how is this helping investors reap more? To have this conversation is Donald Wanguyu, who is the Chief Executive Officer at Forefront Management. Thank you very much for joining me.
A pleasure.
Karibu sana.
Yes.
We could just start with what Forefront does. Who is Forefront?
Forefront is the first licensed robo-advisor. And what a robo-advisor does is use technology. You mentioned AI, which is one of our core pieces of technology, algorithms, to help you find opportunity individually, right? Because it's technology, everyone has a phone, everyone has access to internet, so they get personalized service at a very high quality. All of these services are available. You know, if you're a high net worth individual, you're going to get personalized service. So the question becomes, how do you give that to me, you, to the entire population? You use technology, you use the phone. And so we are able to deliver this level of high quality opportunities, investment knowledge and advice to the normal person. Yes.
When you talk about a robo-advisor,
yes,
you are the first to be licensed in Kenya, right?
Yes, by the Kiptum Markets Authority.
Right, by the CMA.
Yes.
How were things before that? Let's start there.
How are things before that, and how are they for most people who haven't heard of Forefront Management? Is you are in two worlds. You are either, and we'll talk about some of these other areas, you're in a money market fund, or, and the key with the money market fund is whether you are 18 years old or whether you are 60 years old, you're in the same fund. And so the fund manager has to keep in mind your different risk profiles. And for a young person, you have one opportunity, you have one grace period, which is your age, to be able to exercise a higher risk profile. And as you move up, you need to start reducing that risk profile. But because it's one fund and you're all mixed in there, the fund manager has to take the safest and best option on the average. Yeah, you know, the joke I like to tell is if your teacher told you you are average, they didn't say you're a bad student, right? But did they say you're the best student in the class? No. So they do the best they can, which is to give an average return, which is a good return, but it is not appropriate for most people in our view, because Kenya is a young country from a population perspective. So young people need to be able to really get into the stock market and really understand how to pull it through. And in fact, I was looking at a report yesterday, the difference between what we call the boomers, what we call the Gen X, you know, 40-year-old, 50 going up, versus the powerhouse of the country, Gen Z, and their older brothers and sisters, who are the Gen X. And there's a distinct difference in investing methodology and thought process. Gen Z and millennials will try what they see. They have the strength and the fortitude to be able to say, I want to see what this thing looks like. What are other people, what is my counterpart in New York doing? What is my counterpart in South Africa doing? And why can't I get that? Gen X and boomers are more confident in the old way things were done, stable, don't give me any surprises type of investing. And so we now want to serve millennials and Gen Z how they should be served, how their counterparts are served in the rest of the world. Yes.
So of course, this demographic is very exposed, as you say. It's real-time communication and information with people across the world.
Yes.
So understanding the way that demographic views money is very important, right?
Exactly, exactly. What we have is, don't just give me fluff. I will spend time researching and understanding. You know, that's why YouTube is so big. That's why Twitter is so big. Someone will spend time and get into the detail if you offer it to them. That individual is perfect for what is offered by the stock market. Tell me, in a way I can understand, what is happening with the price of the NASI. The NASI is the index, it's the general view of the exchange. or tell me what's happening very specifically with Safaricom over the last 3 months in a way I can understand. And to be clear, when we say in a way I can understand, it means to make money. Don't give me stories.
Yeah.
How can I understand in a way to make money? Which is what I want to now be able to, with your help, be able to express to people, right? So we want to understand, is there really money being made? Did the Gen X's and the boomers sour us from thinking what is actually happening in the market? Are they simply the wrong mental type? And it is good, you know, where they are. But are they the wrong mental type from Gen Z and their older brothers and sisters? Right?
Right.
So that's what we want to look at, yes.
Right. The stock market, as you said.
Yeah.
Even before we get into the algorithmic trading and the AI type of trading, understanding the stock market in itself is not easy for many people.
Yeah.
A lot of young people right now are putting their money in MMFs because there is influencer marketing across board, you know, on MMFs, money market funds. So understanding the stock markets, give us just the basics. What do we need to know?
What we need to know about the stock market, and as I said, for me, I like to put it in real terms. How are we making money from this thing? In fact, I even brought a chart. I don't know if I can put it up, if that's okay. I don't know if the camera is able to zoom in on this. I know it's a bit bright. But if you look at that, that is 10 years. And I want you to focus on the numbers there. Those numbers represent money that was made in the last 10 years. Now, keep in mind, Gen X's told us there's no money being made in the stock market. Keep in mind that boomers, our parents, told us there's no money in the stock market. You're looking at 60%. You're looking at 14%, 15%, 44% growth, 26%, right? In the last 10 years. Those numbers are just astounding, and I know it's not very clear. My person, I should have told him to put it on a black background.
Right.
But just looking at those numbers, what it tells you is, look at the stock market with a mentality to make money. Don't look at the stock market with a mentality to complain. And that's the difference there, and we'll talk about that differently. Maybe I can put this card down. Now, what I wanted to show is that money truly and genuinely is being made. What is another way of thinking about it? Generally, in the stock market, from 50 all the way up to 80% of the people actually doing work are foreigners.
Okay.
Now, why are people telling us that there is no money to be made? And then when I look at the place, I see foreigners coming in and saying, this is where we need to go full force in the market. Yeah, it's our birthright. We were born to take advantage of this, yeah, more than anyone else. Now, don't get me wrong, we are a growing economy, we need foreign investment, certainly. But it doesn't seem right that I did not take advantage, yet my counterpart from Morocco, from Geneva is coming in and taking advantage of the same market. So those are the two ways to think about it. If you look at it in real terms, you'll actually find the money. And then if you ask yourself, why are all these people coming in and not us? You'd have to have a question that you'd have to answer yourself. So let's dig into that and see what's the difference. There are two ways to look at the stock market, because you asked that we get into it, isn't it?
Yes,
there are two ways to look at the stock market. The first is called fundamental analysis. And the second is called technical analysis. So think of two worlds. There is fundamental analysis and technical analysis. And these are all things that we teach an investor when they come to work with Forefront Management. In fundamental analysis, you're looking at company reports, you know, they have investor briefings, you're looking at the economy, all this paperwork, right? And you need certifications to be able to understand what is happening. And that works very well for the Gen X's and
the boomers.
Because they're used to, if I need information, I'll go to the library and I will check out my book and I will read my book. Yes? Let's now bring in a Gen Z and a Gen X. And you ask them to get information. Where are they going to go? They're going to go to Twitter. They're going to go to... And that's why the world now starts separating. And so in technical analysis, you're looking at the price trend. Where do I think it's going to go to? Right? I'm not guessing where it's going. I'm looking at it. And because I know all these fundamental analysts are doing all their reading, they're going to choose a particular price, I'm able to ride on that. And that's where you get a significant portion of the profit that is coming for young. It's no longer in the fundamental analysis. The second part, the second difference about fundamental analysis and technical is all of these financial reports and the details. And the CMA does significant work to make sure that all this information is out into the general public and everyone's using it. And when they say everyone, who do they mean?
Financial advisors. Oh, the Gen X and the boomers.
And the boomers,
yes,
yeah?
Yes.
I know some people will give me a call after this interview. That is helping drive the market. It's helping move markets. What now the Gen Zs are coming and millennials are coming to do is now look at the historical prices. Okay. Right? Now, what does Forefront do? Forefront uses technology to look at those historical prices faster than any human being can do. So within 5 minutes of any market, when the market closes, Forefront analyzes 10 years of market price trends and comes with an opportunity for today. So it tells you tomorrow morning, be prepared to buy this particular security, whether it is Gen Z or it is Safaricom or the rest. The third element that we want to bring in, which is really important for the young investor, is time frame. If you tell a young investor, please invest and then check it in 25 years, you lost them right from the beginning. That was a very good story before. Today, I want speed, I want action, and I want to be able to see what is happening in my portfolio today. Right? And so fundamental analyst is more long-term. We're talking years, many months and years time frame. The time horizon for technical analysis is days or weeks. Okay. Right? So by the time I put my money in and take it out, we are in the days or weeks time frame. This is not the crazy business of, minutes, seconds, which happens, if you go to the Western markets, it's milliseconds, right? We don't have that kind of movement here. What we have here is, I put my money in on Monday, let's see what I get by Wednesday or Thursday, right? I put my money in January, by February, I want to know what I have. So this speaks very well to the current investor, right? In fact, there was a story that was done maybe about 2 weeks ago in the papers. And it said that there's something like 1.7 million CDS accounts. Those are actually investors who have registered. But very few of them are investing. And the reason we see that anomaly is because most of those are the older generation. So I buy today and I wait 10 years. Most of those do not see or have not been told about the opportunities in technical analysis and do not have the infrastructure to help them do that, right? So if we were to look at risks, because now we are looking at...
Before we get into the risks, these technical analysis that you do, you're using technology.
Yes. And
you had the first robo-advisor in the country.
Yes.
So how exactly does this technology work? What are you feeding into it, Help us understand how the technology works and why we should trust it in the first place.
Oh, excellent question. I love that question. Excellent. So if you are going to trade technical analysis, you would need at least 10 years of data. You would then need to learn what happens in price movement. Let me give you an example. If the price moves up for 3 days, does it move up on the 4th day? Right? A simple question. And then you'd go into the data and then you'd see how many times did that happen. That data is available to anybody today. In fact, we want more people. We want especially, my training is in computer science. Okay. And so I always plead with the young computer science crew that is coming out, get into algo trading. That's what your counterpart is doing. The computer can do that, can look at these patterns and tell you, yes, I saw this pattern 3 years ago and it lasted for 2 weeks. It will happen again today, right? That is simply doing the same thing you would do, but we're doing it in milliseconds, whereas you would take, I mean the other technical analysts, I know how sharp you are, Betty. Yeah. What other people would take days or weeks to do. And here's the key. When you do it in minutes, then I'm looking for an opportunity tomorrow.
Right.
And that opportunity will last 3 days, and then I'll be out again. Right? That is the level of opportunity that is in the market. And we are just, when I say we, forefront management, we are just saying that there is so much money to be made, but nobody wants to make it. And I've never seen that situation where nobody wants to make this money. We're so excited about, the returns that are coming in from bonds or money market funds. That's a whole year to make, 15-something%.
Right. It's interesting you mentioned that from the chart that you lifted. I mean, we're talking 60, 26, 44,
yes.
15, and a lot of those are above the market rates.
Yes.
How is this being achieved?
Brilliant. Let's get out of averages.
Okay.
Let's get out of products that are for everyone in the market. Let's get into products that are specific, right? Specific to Donald, specific to Betty, specific to Joe, right? What is your conditions? What is your knowledge level? What are your responsibilities in life? Let's put all those together. That's a requirement by the regulator. The CME says, if you're going to support a person under this environment, you need to truly understand where they're coming from. Now, once I do that, there are opportunities that are appropriate to me that are not appropriate to you, right? So as the algo goes and looks for these opportunities, we then come back to your profile and then we say, all right, is this appropriate for instance, there's one that's 150%, right? Is this appropriate for perhaps a 45-year-old with 3 kids?
That sounds like a lottery, right?
That exactly sounds like.
150%.
In fact, let me pull it up. Let me pull it up. I think I have one of the charts here, but I'll apologize to your audience because it's on white paper. But look at that. That's if they can put it. That's Kenya Power today, right? And I know the story with Kenya Power today is about other things. Huh? Maybe we shouldn't speak about politics here.
Please.
This is not a political show.
Let's stay away from that.
But the people who are looking at Kenya Power from a point of opportunity, just this year, would have made 150%. True, real money. If you put in, let's use some numbers. If you put in 200,000 at the beginning of the year, you'd be walking away with the order of 500,000. Oh, there's even a better catch. I think the audience has seen that, right? And I ask them, please go to any tool in the market that shows our prices. Kenya is a global market, as I mentioned. So all of these tools are there to be able to print them. Now, there's a thing that we also need to understand when we say 150, 22%, 50%. We need to understand that one of our biggest challenges today is taxes, right? How much money is coming out of our pocket? When you make money in the stock market, that money is take home. There are no taxes, right? If you made your 600,000, you will be written a check of 600,000 by your broker, right? And in this case, I want to say by your robo-advisor.
Right.
Yeah? Take home, no tax discussions, right? So the stock market solves significant problems for what people are trying to do. We just want people to now work with it in the power that it has, right? And we need to understand that people want to look at it historically from I made a wrong decision one day. They want to ask their, parents, and they'll say, yeah, I lost a little bit of money on it, I'm not sure. Instead of looking at it from their advantage as a young person, their advantage from an age perspective, and their advantage from an opportunity perspective. Ask themselves, what is that other person in Milan doing and why is he in my exchange when I am doing other things? There's another element that I'd want to bring out for the stock market because it solves just so many problems. If today I wanted to buy a piece of land, forget it if I'm a young person, right? Just the amount of money I have to put in place. The stock market has no such barrier. You can start, if you can put together, say in the case of Forefront, if you can put together 50,000 shillings, the world is open to you. You will do with that amount of money what high net worth people with 50 million shillings do. You'll get the same quality service. You'll get the same quality opportunities. Because believe me, high net worth are being brought these opportunities every day in their offices, right? Who's doing that for John and James and the rest, right? So imagine now sitting where you are in the job that you're doing, and then you get a message saying you should look at KPLC. We think it's going to grow, and it's going to grow wild, right? And you're in the correct profile to look at it, right? Those are the things that now come to you. The same way an advisor would come to a high net worth, now it's coming to you as an individual. Yes.
And how accurate is this information? Because, well, at the end of the day, we're just looking at numbers and you know, the historical perspective of it to predict what will happen.
Yes.
What is the rate of accuracy?
The rate of accuracy, so let me start by what exactly is the algorithm tracking?
Right.
The algorithm tracks psychological decisions of the general public, right? What do people generally do? What we find is that people don't really change much, yeah? Unless I go through some sort of event in my life, I will generally make the same decisions I used to make before. And so when we started tracking this, we actually realized we could get it to about 70% accurate. And we are that's the first thing you will learn, is that we won't tell you it's 100%. Because we need you to be a serious investor. When we say you're not a serious investor is when you don't understand, and I want to get into it, but let me just mention it here, is when you don't understand consistency. When you haven't taken control of your emotional risk, and we can discuss emotional risk. When you haven't, there's about 3 or 4. Let me just look at my notes here. There's about 3 or 4 elements that you have to take care of for you to take advantage. One of the ways to know that is, even as we're drawing these graphs to see how they're doing, they're not straight. The profitability is a straight line. Right. But the price did not move in a straight line. The price was jagged, right? And if you didn't have emotional control, as soon as it started dipping, what would you do? You'd call us up and say, I'm out. I'm out, yeah. So someone who is able to then work with their advisor and say, you know what, I'm starting to get nervous. And the advisor says, yeah, we see that. I think we'll set your maximum loss at a certain number. And if it goes below that, we're out. But if it doesn't go below that, let's try and shoot for the moon. Right? And you're able to control it that way. Remember, it's personal, right? It's personal advice. Yeah. It's the same. You know, I want people to think about the richest man on the planet that they understand.
That should be Musk right now.
It should be Musk right now. I agree. But you know, the thing with Musk is he's there. You know, think of Dangote. Think of people living in the country. Then think of the people who are outside of their offices, ready to tell them, yeah, I think this is what's happening with ABS, and I think we need to get into it. And then he'll tell them, I'm getting a bit concerned. Then they say, okay, sir or madam, we shall now put this, you know, that same level of service is what you get here.
So even as, let's delve into the risks, you know, a little bit more.
Okay.
Beyond emotional resilience that you require, what more do you need?
So you need consistency. I'll give an example of consistency. If we're tracking a price, let me give another one. Let me give another one here. Perfect. So if you look at Kengen, right?
That's KCB.
Sorry, this is KCB. Thank you very much, KCB. Now, KCB, when it started off, was a bit higher than around March, April. There's a little dip, all right? In that little dip, if I called you, Betty, and I told you, you see, for this dip, we need to add a bit more money so that we can make more profit, right? What would you tell me, right? That's the consistency that we need. It is someone who's saying, I am in this market because I believe the market will make money. I don't look at a dip to then conclude that this market is not working for me. Right? The investors who I see who are able to then make that switch in their minds, this young investor, that yes, it will go up, it will go down, I know you'll protect me on the downside risk, and we spoke about that a little bit. But if I told you add more money, that's the person who really makes it big. That's the person who will then go to the 50%, 75%. The person who does well, you know, but not so well, you know, the average, yeah? We spoke about the average. Will tell you, no, I'm getting really nervous. I want to just keep my money there. So we need consistency. We need you, and we'll train you with it. We will train the customer on how to manage emotional risk, because one of the key areas we found, and it is a characteristic of our good Gen Z and their older brothers and sisters, is they're a community. Everything they do it as a community. That came in because of social media. And in social media, everything I do is a community. So what we do in Forefront is we actually ask you, bring your community. Let's have a discussion together. Let's have a discussion about KCB DIP together, so that you don't have a conversation with your advisor technologically, and then you go talk to Stephen, and Stephen tells you, I wouldn't even touch it. I would be, that destroys the entire structure. So why don't you bring in your entire community? If you're looking to start an investment group, which is a wonderful Kenyan culture, bring that entire investment group in. Mm-hmm. Get this discussion managed by a professional advisor, and you'd be able now to start working together. You could have elements that are really deep, that are concerning you, that your friend knows, that your advisor doesn't know. Mm-hmm. Right? And now we're able to help you have that conversation with your friend, but it's a knowledgeable conversation. It has the facts, and you're able to take advantage of the market.
Right.
Yes.
Before people even get to investing, they have to put something away, right? You don't just you don't just wake up and put in nothing.
Yes.
So it is said that the saving culture in Kenya, of course there are numbers to show this, is very poor. Mm-hmm. Very few people are saving, and it's a number of issues. There's the economic problems that we are going through, so money is very scarce. Mm-hmm. How does someone get to that point where they have even the mind to save? Mm-hmm. Very consistently, in a very disciplined manner, and then now move to the investor side? Yeah,
great. That's I would say that's the third question we get from every investor. Mm-hmm. And it's, in our view, dream, and dream big, and dream to the extent that what I sacrifice today, just the dream itself will carry me through that. A lot of people, especially, and it may not be so positive, but on social media there's a lot of big lives and the rest, and those people are young, and so that's not a very economic-wise, that doesn't work very well. But what I like about it is it allows you to dream. And dreaming, when a man has hope, when a person has hope, mm-hmm. they can be taken anywhere they need to be. I give a lot of classes at university, and one of the things we need to understand is that the current human being of today has got more opportunity than has ever been in this life. And it's a long story. It starts from the Industrial Revolution and then the Technology Revolution and the rest. But your ability to make money today cannot be quantified in any way. There's no number that can quantify from a subsistence farmer 1,000 years ago. Right? There is such opportunity in the market, being delivered by the internet, being delivered by technology, to the extent that you can actually see a difference in generations in terms of how these people are taking advantage. We spoke about them, the millennials and the Gen Z versus the boomers and the Gen Xs. It's that fast, right? And so if you're a young person today, what I always tell when I give these talks, dream. And really dream. And that's why I say, you mentioned Elon Musk. Don't dream about Elon Musk. That's in another country. Mm. Dream about somebody here today, preferably a business person, not the others who are making a lot of money who we shall not discuss. Mm-hmm. But look at a business person. If it could be your friend's father. It could be your friend's mother, cousin, someone who you can see is progressing in life. Look at that and then dream where they could go, and then see yourself in that. That will push you through anything. And I have seen it. It's just a powerful message for a young person to say, yeah, I can be what I see, what I'm actually seeing other people doing, I can do that. And then if you tell me I need to put away 1,000 shillings, I need to put away 500 shillings, oh, that becomes a very easy sacrifice. I don't even see it. So for me, that's one of the more enjoyable conversations I have, is when you see the spark in the eyes that, really, we can actually make it. Yeah, we can actually make it. Let's go.
Right. And of course, some people are pulled into that pressure of wanting to be what that person is right now.
Exactly.
Which probably is impossible. It's a journey. You have to take that journey.
Yes.
So how do you work on your mind, to move from, okay, they are at that position, they are doing well, but it took them time to get there. Yeah.
That's one of the solutions in the stock market, answering that question. Yeah?
Right.
So now this person is dreaming and saying, yes, I can do it and I can make it. And therefore I can start putting money away. If you then tell this person, okay, put money away now, and then I'll show you what has happened in 20 years, you've then lost it. I mean, you've destroyed that entire hope. Yeah? But if you show this person, put this money now, and in 3 months, let's see you pulling out 30% return. Let's see you pulling out 25% return, even 10% return in a month, right? That person, by the time they look at their statement and then say, really, it actually happened, yeah? At that point, if you tell this person, let's go to the moon, they'll ask you, when shall we pack our bags? Yeah. So the stock market reinforces the discipline that somebody has. They need the dream to be able to begin. They need the correct financial advice. If you put that person in my view, if you put that person in a money market fund, that dream now has been prolonged again 10 years. Yeah, that person will more likely take all that money, put it in crypto, put it in all of these other more fast-moving elements. Those fast-moving elements do not have the protection required. Yeah, one of the things that is the work of the regulator, the CMA, is to create a fair and orderly market, which means I can go to sleep today and wake up tomorrow and I'm not wiped out. Yeah, I may lose, I may gain, but I'm not wiped out. Yeah, that's what ensures that you can grow with the market. What we're now injecting, our new word in the market, what we're now injecting is the ability to do that in a shorter time frame using technical analysis. And in the world, I was in a benchmarking trip in India. They run 18 billion orders a day. Now, Indians are many people. Huh? There's a large population, but no human being is typing out 18 billion orders. Right? That's all technological. That's where all the young people are doing, right? If you're going to be hired at an investment bank, your counterpart, yeah, if you're a Gen Z or a millennial, your counterpart is told the first thing you need to do is learn how to code algos. That's your first job before you even enter the investment bank, before you start giving advice. Let's bring that home, right? Kenyans have been known to be some of the smartest people globally, right? I'm a returning diaspora, so I know this firsthand. Yeah, it is a reputation that is there in the market. We want to give this opportunity to them.
Right. Yeah. You've mentioned the Indian stock market, and I'm just wondering, with this technology that you offer, and maybe there are other players in the market who offer it, can you access the global markets as opposed to just focusing on the NSE, take advantage of all the profits you can get out there? Yes.
So first of all, I think the statement is Kenya ni home, I think is what they say. So our largest focus is the Nairobi Securities Exchange. As I mentioned, people are coming here. So you can imagine people going out and crossing with people coming in, right? And both of them are saying we're going to look for profits, right? Yeah. So we are unapologetic that the core value, where you're going to make money, if you are a Kenyan-born citizen or if you're a citizen of this country, where you're going to make money fundamentally is the exchange. So we are unapologetic. Now, opportunities don't happen every day. You're not going to get an opportunity to buy something. Yeah, the algo can, after analyzing, say there's nothing today in the market. What do we then do with your money? What we do is take your money and we will put it in a more global product. Yeah, we are a division of a larger unit called Standard Investment Bank, and it has wonderful products, of which one of them is one of the largest growing funds in the market, and it's a global fund.
Okay.
And so while we're waiting for these high quality opportunities that match your profile, your money will be there. And so it's already exposed to the market. And so what we'll be saying is that as soon as we see an opportunity in Safaricom, then we'll say, all right, let's pull the money, let's put it in Safaricom for 3 months, pull it out, take our profits, put everything back, and wait, right? So today, you don't get idle money, right? It's either in a direct opportunity, right? As we said, unapologetic about the stock market, or it's sitting in a global fund, right? And so at any particular time, the money is always moving, right? And this is all to support the new psychology of the investor, right? I need to be moving fast. I need to be seeing what's growing, as you've correctly put. I need to be able to be exposed to the entire market, but I also need to know what's happening back home. We are unapologetic because it's a birthright.
Right.
Yeah, we can't get away from that. The same way a New Yorker wakes up and says, I'm going to go to the New York Stock Exchange, or an Indian wakes up and says, I'm going to go to the National Stock Exchange, which is what they call it. A Kenyan should wake up and say, I'm going to the Nairobi Securities Exchange.
Right.
And walk in proudly, right? And see the opportunity and get the return fast, in my view, even before the foreigners. Get the return fast and then share some with the foreigners.
Right.
We are not bad people.
All right. Let's,
Yes.
as we come to a close of the conversation, I'd like you to tell us if you can make money when prices are falling.
Oh, thank you. Thank you. That I think is the most exciting. That's, I think, is the most exciting part of the conversation. The Central Depository and Settlement Corporation, CDSC, holds everyone's shares. The best way to think about it, they're the bank for shares. So if I say I'm holding KCB, my account is there, right? Just so that we can get some foundation. What happens when the price is falling, right? I'm going to use you as an example.
Okay.
You are a forefront customer. Your profile says, I want to move, right? I, as a forefront customer, let's presume I am 20 years older. I want a more relaxed environment, right? And I own, let's choose a security, KPLC, right? Now, the algo tells you KPLC price is going to fall, right? And you say, all right, let us try this strategy called short selling, right? Short selling, right? What short selling says is go to an older person, someone who is very stable, your Donalds of this world, and borrow the security. And the Central Depository, the CDSC, have a huge mechanism for ensuring that my shares are safe, even though I lend them to you, right? My shares are safe. You will put some collateral with them. They will keep monitoring what you're doing. You sell them in the market. So maybe you sell it at 100 shillings, right? So now you're holding, maybe you borrowed 100 shares from me. Sell at 100 shillings, you're holding 1,000, or is it 10,000 shillings? Then the price drops, right? The price drops to 50 shillings. You buy them back, right? So now you've spent half the amount of money to buy back the shares, and you return the shares to me, right? You have now made money when the price is falling, right? Remember, you sold at 100 and you bought back at 50.
Right.
Excellent money in your pocket. When that strategy was developed, it was developed around the 1600s. It was so powerful that it actually crashed the market at the time, right? Because now people came and said, oh, I really don't care whether it's going up or going down. I'm making money either way. Yeah. Let's go in, right? And then you start overwhelming the market, luckily for us, the exchange has such technology. We barely use what it's there, right? And so we're able to now offer all these instruments to you, so that in very simple terms, if I am a Gen Z, and I'm told, I think this price is falling, I can say, I want to get involved in that short sale, We already have the millennial, not the millennial, the Gen X, who is willing to lend you money. You'll give him a small interest. You're using his assets. You'll give him a small interest. And we are in town. We are able now to make money when it's falling, when it's rising. So this idea that the price, there's no opportunity goes away. Yeah, there's the profiles who only want to go only in long positions when your prices are rising. There are profiles that want to use both advantages, and they all get individualized service, all supported by technology.
Right.
Yes.
Wow, Donald, I think this is a conversation that cannot be completed in even 2 hours.
Yes, I really thank you for it.
Right, but
yes.
we are out of time. I'll give you only 30 seconds to give us your closing remarks, please. What is the future like?
The future, if Kenya goes the way the rest of the world has gone, and there is no reason to believe, because we are just smart people, yeah, we are recognized. We are going to head into technology, into technical analysis in a big way, just from the level of intellect that is housed within our borders. As I said, you know, markets, Western markets are up to 80% technical analysis. So we're heading there in a big way. What we want are people first to understand that there is a lot of opportunity in the market. They need personalized service. It's good to go with the other products, but if you are a young person today getting into the market, if you are a mid-level person getting into the market, get the right fit, get the right glove for you, right? And in our view, Forefront Management solves exactly that problem. Right. And I thank you very much. I always enjoy our conversations.
Asante, me too, Donald. Thank you very much for speaking with us. I have been talking to Donald Wanguyu, who is the CEO of Forefront Management, discussing how algorithmic trading uses AI to invest, to ensure that investors are getting the most from the stock markets. He says there's a big opportunity there that Kenyans need to take advantage of. This conversation, of course, continues online. You can continue that conversation at KBC Channel 1. Tell us what you think. We want to take a quick break. When we come back, we shall talk about matters agriculture and how we are working towards food security. Stay with Channel 1.